Thanks, James. Good afternoon, ladies and gentlemen. Great to be with you, part of the Switzer Investor Strategy Day. If I was to ask you at the moment what interest rate you would like as a term deposit, bank rates for $1 million can be over 2%, but the bank deposit rate at the moment is sitting around 1.9%. It's been less than 5% for the last 5 years. So if you wanted a fixed rate return on your investment today, what would it be to beat inflation, whether that's a 3-month term right through to a 5-year term? Investors now have the opportunity to bypass the low-rate fixed interest market that the larger financiers are offering and invest directly in a non-bank lender for superior fixed interest returns. Our investors are confident to invest in our company as we offer a high-yield, reliable monthly return from 4.25% up to 12% per annum. Transparency has been the key to our success. There are no management or establishment fees to maintain your investment with our company. We've reinvested profits back into the company since inception, and we've actually paid over $44 million in interest returns. Our investors, they rank first in preference to be paid. Investor Central, it is an unlisted public company. At Investor Central, we offer a fixed rate return, and it was established in 2010 to raise capital to fund the expansion of our wholly owned subsidiary of Finance One. Finance One looks after consumer and commercial borrowers, predominantly to the motor industry, but not exclusive to, for the purchase of a car, truck, or light commercial vehicle. I personally have been operating in the finance industry since 1997. Over 20 years now of lending and collecting money. This also included me in the early days going out 3 nights a week to actually collect on these loans. This was the making of our company. By truly understanding how to collect money, we were able to build a very strong foundation for credit. During the GFC of 2008, we prospered. We had new clients looking for finance, and we managed our existing clients through those uncertain times. Some of our competitors didn't have the capital to be able to lend out during this period. However, we continued to grow, delivering outstanding returns. We have remained strong during times of economic uncertainty. We've been profitable from our first year, with our foundation investors continuing to invest in our company. Over 90% of our current investor base roll over for additional terms. We've structured the company so our investors rank first in preference to be paid. This is personal for me. I own the company. We've got a covenant through our prospectus, which is a registered document with ASIC, that our investors rank before ordinary shareholders. There are no other finance creditors other than our investors. There is not $1 of bank funding. We offer a fixed term to our investors, providing them a regular monthly return on their investment. All of our directors, they're also investors with their own capital invested into the business. We have distinct bandwidths that our investors can invest from and to. So from $25,000 for a 3-month term, you've got a 4.25% per annum investment, right through to a 60-month term, which is 5 years at 8%. Our average investor sits around that $300,000 mark. So from $250 to $500, you get a 2-year term at 7.25. It's like an equity-style return. Your interest is paid monthly. Computershare is a share registry, issuing share certificates in the company, along with doing the monthly distributions back to our investor base. Our largest investor has $10 million invested with us, but the most you can have in one single tranche is $1.5 million, meaning that we can't have too many funds maturing at one particular point in time. But for a larger amount, you get from anywhere from a 3-year term at 9.5% right through to a 5-year term at 12%. This provides a great equity-style return through a fixed interest rate for all our investor base. Investor Central, we've taken a measured approach to growth. We raise capital progressively to match the demands and opportunities presented by our expanding business and broker network for Finance One. We're proud to provide complete transparency to our investors, demonstrating exactly how money is used to generate these strong returns. We look after a market segment that others cannot. We charge a little bit of a higher interest rate and return a higher interest rate back to our investor base. Our company, we understand the responsibility we have to our investors. At Investor Central, we take a transparent approach in providing the opportunity for our investors to fully understand the business that they're investing in. We meet with our investors on a regular basis. Because we're an unlisted public company, we present our full year and half-year independently audited reports, and we also communicate on a 3-monthly basis our quarterly performance updates, which include the metrics of the loan book, but also management-style financials. We've chosen the direct avenue for investors rather than obtain capital from the larger financiers. Therefore, I've been able to retain 100% ownership of the company, but we're not restrained. Like other financiers, when you go through a GFC event, they become capital constrained. We've been able to move past some of our competitors because we're not in that situation. Finance One, we're a non-bank lender, providing finance for consumer and commercial borrowers to purchase a motor vehicle predominantly. Our loan book today is over $145 million. We've got over 10,500 active clients with a current loan, spread right across Australia in different regions, but also economic conditions as well. This provides diversity for the loan book. Our average loan size is only $18,500 for a consumer loan or $24,500 for a commercial loan. So we're not talking big ticket loans that can fall over. We're insulated and protected against that. We've expanded our broker network and we operate nationally through a network of over 1,000 finance brokers referring our range of products. Our assessment process, it's personalised. When assessing an application, we take the time to ask more questions than the average lender so we can fully understand our client's personal financial situation and credit history. Our finance brokers, Peter touched on it before, car dealers, we verify everything that comes to us. They supply us with an application form, proof of address and income, proposed purchase, credit file, but a minimum of 3 months worth of bank statements on every client for a consumer, but also up to 6 months worth of bank statements on a commercial borrower. Our verification team pick up the phone and personally verify their address and their income. We drill down into 3 months worth of bank statements, making sure that our clients truly have capacity to get a loan with Finance One. Through this very rigorous and prudent application process, less than, historically, 1 in 5 clients have actually settled with a loan with Finance One. 4 out of 5 don't make it through. We're very careful on whom we choose to give a loan to. If we can't help somebody, we don't. We will reply to them and advise them what they may be able to improve into the future so they could reapply with us. A unique attribute about Finance One is managing client relationships throughout the term of their loan. Our team work closely with each client to help them through the repayment process and to keep them on top of managing their obligations. We see this as an integral part of our responsibility to clients whom have specifically come to Finance One to either establish or re-establish their credit rating. There are times when people can experience difficulties for whatever reason, whether that's a loss of income, partner separation, or illness. We have the processes in place for these occasions to recoup the funds like any responsible financier. It's how we work with and engage our clients. That's ultimately how we keep them on track. Finance One's major point of difference in the market has been its personal and compassionate approach to lending, allowing us to help hundreds of new clients every month. Following slide shows where we sit in the market. These are reviews directly from our clients. Excellent reviews from our clients through the website product review and a star rating of 4.8 stars out of 5 is exceptional. It's reflected from our team and how we engage our network. This helps Finance One grow with repeat customers coming back and those existing customers referring new customers to Finance One. In this regard, we stand out from some of our competitors. We rank number 4 in the country for car finance, but number 1 for popularity out of a group of 55 peers. Just a great result for our team. You would have seen in the media, everybody's been exposed to this, the Hayne Royal Commission, looking into banking, superannuation, financial advice, but in particular, responsible lending in our industry sector, as well as Flex Commission. Finance One, as I mentioned before, through our loan process, we've been meeting our responsible lending obligations from day one. We compile a lot of data on our clients, but we actually physically verify each step of the way. If the larger financiers had to do our process, they'd have to re-engage or re-employ thousands of people to be able to do that rigorous process. They're also looking into Flex Commission. Flex Commission is where the lender will set the rate, and then the intermediary or the car dealership or broker, they actually add on to that rate. Finance One has never participated in that. So we've been ahead of that curve. We set the rate, not our finance brokers. In this regard, as an unintended consequence from the Hayne Royal Commission, a lot of financiers are pulling out of the market, but we're geared to be able to service and help so many more clients. We're in a wonderful position to be able to continue our growth. Transparency, it has been the key to our success. And we communicate regularly with our investors through our financials. So our earned income last financial year grew from $23 million to $33 million. It was up 44%. Net profit before tax was up 43% from $4.2 million to $6.1 million. Now our total equity, which is a buffer for the investors, has grown 47% from $9 million to over $13 million. On top of that, we've got a provision for doubtful debts as well. Our loan book value, it increased 40% from $88 million to over $125 million. And I'm very proud that we've paid over $14.6 million in interest to our investors last financial year. And the gap continues to grow between the size of the loan book and the funds borrowed from investors as we reinvest the profits on a monthly basis. Like any lender, risk management's a vital part of our business. We manage this very carefully, and as Finance One's loan book matures and remains competitive in our industry sector, we're budgeting on medium write-off levels of between 11 and 14% of our revenue. Our combined provision for doubtful debts and our write-offs last financial year was 11.58%. Our actual bad debt expense on its own was 5.85% of revenue. This equates to less than 2 cents in every dollar. Managing risk has always been a priority for Finance One, and our loan account managers continue to stay in regular contact with our clients. I've been doing this for over 20 years of collecting money. We've built some great resources to be able to collect on these loans. We've also built our provision to now over $5 million as well as an extra protection for our investors. The next slide, this looks at our write-off tolerance levels. This helps demonstrate the strengths of our business model. The following graph shows our loan book principal and interest owed to Finance One over the next 5 years, which is over $213 million in principal and interest repayments. We owed after cash holdings are returned to our investors as at the 30th of September this year, $116 million. That's a difference of $96 million from what we're owed by our clients to what we owe our investors. To demonstrate the strengths of the business model, we take off our historical provision for doubtful debts of 2.7%. We're still left with a balance of $208 million. But if we had to stress test the business model and we take a 7% write-off, we're still left with more than $198 million. Or if we extrapolate that to a full 25%, we're still owed more than $160 million. The write-off tolerance equation helps demonstrate the strengths of our business model. We continue to build a substantial margin of safety. Ladies and gentlemen, I invite you to consider an investment in Investor Central as part of your balanced investment portfolio. Referrals, they're an important part of our expansion, and that's how we grow. And I welcome you to refer anyone whom you feel may be interested in an investment in our company. We offer a high-yield, reliable monthly return from 4.25% per annum up to 12% per annum. Transparency, it's been the key to our success, and our investors, they rank first in preference to be paid. No management or establishment fees to maintain your investment with our company. Thank you, ladies and gentlemen.